We just triggered a kiss of death signal. The emergency warning sign of a long-term bear market. Prepare now. On Friday, September 30th, the last day of the worst month in the market, we just triggered the most deadly warning sign in the market. The kiss of death signal. I'm going to talk about what this means for the markets. And plus, I'm going to explain what will happen this Halloween month for the markets. At last, I'm going to dive deep into why this time will be a long-term bear market with the gifts of Michael Burry. You don't want to miss this. Trust me. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these markets, please consider subscribing, and of course tap the like button if you've enjoyed today's video. If you like any of these topics, you are intelligent. That's why you're here. You know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a sweet boy, go to patreon.com/magicalgoddesscheryl to support all my work. If you want to be my good boy, apply to write your first book with me, author of best-selling books, Goddess Cheryl. My good boys always obey, and they always get rewarded handsomely. Have you been a good boy? You will get the encouragement you need to be on your author journey. If you haven't watched my previous video explaining what the kiss of death signal is, let me just explain. There are 3 essential steps in triggering the signal. It has to be in S&P 500, as you can see from this chart. The first step is monthly close below 21 EMA after an all-time high. The second step is pull back to or above the monthly 21 EMA, and that's the kiss. The third step is drop below the lowest point before the pullback bounce. That's the death. In the past, when this occurred, let's look at 2008. Notice what happened that year. The S&P 500, from all-time highs, it fell below the 21 monthly EMA. It then bounced back toward the monthly 21 EMA. That's the kiss. After that point, it failed. As you can see, it took out the prior low. That's very critical. It has to make a lower low before the bounce, and that's where the death is triggered. Then the S&P 500 had a major 50% long-term bear market crash all the way to 2009. But wait, notice there is 1 month green bar after the death signal is triggered. That's actually in August. At that time, the stock market was only down 23% when the kiss of death was triggered. We are already down 25% now. What I am saying is to look for a month-long bounce around 5 to 6% in October on the S&P 500. Let's move back and look at 2000 to 2001 dot-com crash. As you can see, the all-time highs, the stock market dropped and closed below its monthly 21 EMA here, bounced back to it and had a kiss. It failed, triggered the kiss of death again. Then the stock market dropped by 50% from the all-time highs. Notice the S&P 500 was only down 22% when it triggered the kiss of death signal. It took almost a year from all-time high, happened at March of 2000 to February of 2001, to trigger this signal. It didn't bottom until October of 2002. Wow, from all-time high to the bottom, this bear market lasted 944 days. I would say that's a long-term bear market. The reason why it took so long to drop is because there are always counter-trend rallies. Some of them last 2 whole months. However, there is a time when this didn't trigger a long-term bear market, and that was in 2015. You can get false signals too. As you can see this chart, we had a kiss of death here. It did trigger, but that was a false signal. In the case of 2015, notice the kiss is almost close to an all-time high. It's way above the 21 EMA. That's why there is no death. In both 1969 and 1973, the kiss of death signals both triggered a long-term bear market crashes. Notice both kisses are much lower than their all-time highs. In a nutshell, by triggering the kiss of death in September of this year, the stock market has now increased the probability dramatically of a long-term bear market. Okay, let's talk about this Halloween month. Based on the AAII Investor Sentiment Survey, this is the first time pessimism is above 60% in consecutive weeks. It's showing you that people are freaking out. The smart money versus dumb money chart is once again bet on the opposite side. Notice dumb money is super bearish, selling the fear while the smart money is buying the fear. Accumulating position at the lows. In the past, we always see a rally after the dumb money reached a low at 20. Well, we are here, so prepare for a rally potentially coming. If you still think this could be the bottom, well, understand the kiss of death signal, you know we are going way lower. This is a tweet from Michael Burry on October 1st. He said 13% of stocks closed above their 200-day moving average yesterday. Bottom in 2009 was 1.2%. Bottom in 2020 was 2.8%. Meaning this is not the bottom here, because we can't bottom until the Fed pivots. A 46 trillion wipeout in stocks and bonds won't stop until central banks around the world launch a coordinated pivot, Bank of America says. It's been a tough year for investors, with global stock and bond markets erasing 46.1 trillion in market value since November 2021, according to Bank of America. The massive drawdown has led to forced liquidations on Wall Street, the bank's chief investment strategist, Michael Harnett, said in Friday note, highlighting the recent break below 2018 support in the New York Stock Exchange Composite Index. The investors shouldn't expect the pain to stop until the Federal Reserve, in coordination with other central banks, pivots away from its currently hawkish monetary policy and towards a more dovish stance, according to the note. That's because this year's interest rate and quantitative tightening shock from the Fed has hit Wall Street's addiction to liquidity, Harnett said. And while the Bank of England and the Bank of Japan have recently pivoted to a more dovish stance amid turmoil in their local currency and fixed income markets, That hasn't been enough, as evidenced by the continued downtrend in stock prices. Markets stop panicking when central banks start panicking, but BOE panics, not yet credible nor coordinated, Harnett said, referencing the fact that the Bank of England's recent easing measures, combined with the UK government's tax cut plans, run counter to its goal of reducing elevated inflation. As to when such a panic by central banks might occur, Harnett believes mid-November is a possibility, arguing that the S&P 500 could fall another 10% from current levels by then, which would force policy panic right when the G20 meets on November 16th. Such a policy shift from central banks would help spark a short-term relief rally, but the stock market likely won't find its ultimate low until the first quarter of next year, when recession and credit shocks lead to a peak in interest rates and the US dollar, Harnett said. To take advantage of such a decline, Harnett recommends investors nibble if the S&P 500 hits 3,600, bite if it falls to 3,300, and gorge if the index touches 3,000, which would represent a peak to trough decline of 37.5% from its January peak. Based on historical data, the S&P 500 has experienced 20 bear markets over its lifetime, with an peak to trough decline of 37.3%, which would be right in line with 3,000 for the S&P 500. So now I'm going to show you Ignite the Passion, Co-Create Your Dreams by my clients David Vine and Jama. This is a collaboration book, such an incredible book. And my client Teddy Eazzy's Wicked Pussy Perfume, the erotic novel. It's so amazing. And my Pizza Party book. It is a best-selling book. And my book, You Hold the Magical Key to Your Success. Another outstanding book. So these books help with anxiety, depression, stress. We are living in uncertain times, so order your copies today. They make lovely Christmas gifts too. And I thank you for being a fan and watching and liking my videos. Bye.